Hello, everyone. Welcome to today's Practitioners Insight webinar, Return on Investments with a Purpose, the growing space for peer-to-peer lending, hosted by CFA Institute. First and foremost, a very warm welcome to all our audience joining us from different parts of the world for an insightful and engaging topic. I'm Pankaj Sharma from CFA Institute, and I will be the moderator for today's webinar. I lead capital market policy for CFA Institute in India, and in my role, I'm responsible for advocating policy positions on issues that affect Indian capital markets and its stakeholders across a broad range of subjects. Before I introduce our speaker for today, I have a couple of housekeeping notes. Today's webinar is scheduled for 60 minutes. First, we'll have some questions for our speakers on the markets and his business afterwards. And we'll also take up questions from the audience. So please keep sharing that. In fact, we'll be leaving enough time for Q&A. So please keep your questions coming. I also want to highlight that we are eager for your feedback and want to listen to you on the topics we should cover. So if you have any suggestions on that, please do share. And this will be very helpful for us to plan the future events. In short, we immensely value your feedback, so please complete the evaluation survey before you sign off today. Now it is my pleasure to introduce our speaker for today, Siddharth Khajuria. And it's a tough job for me to introduce him because I'm not able to decide what should I include about him and what should I exclude, because his resume, very similar to his firm and organization he worked for, is extremely interesting and diverse. His range of experience and the things he has done is just amazing. But I'll still try to do my job, and that's where I start. Siddharth is currently working as Vice President Investments and Partnership at Rangde, a RBI registered NBFC P2P lending platform. Rangde is focused on democratizing access to affordable credit for underserved and unbanked communities in India. And before this, he worked at multiple organizations at which the common thread has been his long-standing focus on creating a better and more equitable world for everyone in a more sustainable and financially viable way. In fact, I've spoken to him a few times, and his views on many of these topics are extremely interesting and inspiring. But I'll just come back to what he has done. His experience includes positions with ISKCON, G20 for India and Brazil, Vasuki India Fund, Confederation of Indian Industry, United Nations, Fab Hotels, and McKinsey. Siddharth has a Bachelor of Technology degree in Mathematics and Computer Science from Delhi College of Engineering, Delhi. I stop here, but over to you, Siddharth. I'll not come between you and the audience. We all are very eagerly looking forward to listen to you so that we can also learn about what you do and how the community and the audience could get more understanding and better knowledge about this space. Thank you so much. Over to you, Siddharth.
Well, thank you, Pankaj, for that humbling introduction. Gratitude to you, Harshad, and Abhishek, and the entire CFA Institute and the society. And thank you to my peers. Since this is a webinar focused on peer-to-peer lending, I will start with my peers. And thank you for attending and joining from all across the world. We'll just try and do a very quick dipstick to understand not just from an audience perspective, but also from a peer group perspective. I would request Harshad to load the first poll. And we'll give about a minute for everybody to register their responses on this. So the question stands, we want to understand the current mindset. How much money have you donated in your lifetime? And there are two options, less than 10 lakhs, greater than 10 lakhs. And is your impact traceable and measurable? Glad to know that note that 50% of our participants have already registered their responses, just waiting for the other 50%, and getting a very interesting poll result. We have almost 80% of you looking saying no to the second answer, where your impact is not traceable and measurable. And very glad to say that 85% of you do believe in philanthropy and have invested closer to 10 lakhs. We can stop the poll, Harshad, and we'll move on to what does this tell us about our current mindset. I want you to guys to look at one of the case studies that we were looking at. In fact, this is a Rangde success story as well as a case study for all of us. In Achitra, Gujarat, a very small town, we have a self-taught tailor from YouTube, Karuna Amaseda. She was earning just enough to get by. Most of the times, her monthly wages used to get over by the 18th or the 20th of the month. And with no access to formal credit, her plans to go big in life always stalled until the Aga Khan Rural Support Program, the AKRSP, trained her in business and helped her open a small beauty parlor. That was the first step towards financial independence. Seeking the unmet demand in a village, because that's mostly one of the challenges with rural livelihood schemes, is that there is no forward linkage model there, or there are hardly any forward linkage models. Uh, Karuna wanted to expand into a general store, to stocking accessories, groceries, and clothing, but she needed capital, and that's where Rangde stepped in. 29 of our Rangde social investors, people like you and me, contributed 50,000 rupees in low cost credit with no collateral. The only collateral that we took was trust. Trust that she would return the money back because this was a livelihood linked loan. Very happy to see that her store has started thriving. She serves not just her village but nearby villages as well. She has already started to income about 20,000 to 22,000 in revenue per month, and she employs 2 women today. From somebody who was dependent on her family, is now providing financial independence not just to herself but to other women as well. And this is what happens when you start investing in fellow Indians. Let's check our appetite one more time. We would want, Harshit, if you could share the poll. Thank you. The question is, how many of you understand P2P or peer-to-peer, but have not come across a sustainable model so far? So please answer yes if you understand P2P and have not come across a sustainable model so far. Please answer no if you do not understand P2P. Wonderful. So getting a very mixed response. We have close to about 50% of you saying you do not understand the peer-to-peer model. And we look at almost the numbers going at 60% now, very close to 60%. So I think this is today's topic is going to be very interesting for the 3/4 of you, because this falls into your don't know section. So things you don't know that you don't know. And that's where precisely our philosophy for setting up Rangde was, comes by us through. Let's look at another very, very interesting collective success story. This is Magalir Mattum, based out of Chennai. Magalir Mattum in Tamil stands for ladies only. It's more than a name, it's a self-run collective of women entrepreneurs who are redefining retail in rural Tamil Nadu. What began as a tailoring unit evolved into Red Dot. And Red Dot today symbolizes resilience, collaboration, and women-led enterprise. But how did the story unveil? So with ever growing demand, they started a pilot where they launched high quality inskirts in 42 colors, 18 fabrics, and all sizes. When they started seeing a demand uprise, uh, they wanted to create more. However, to create more, there was a working capital requirement. They applied all six of the ladies that you see in the picture have Jandan bank accounts. They applied to the local lender as well as the local cooperative bank, but were denied the loan primarily because there was no collateral. Hence, Rangde came forward again, backing them with 5.87 lakhs in low cost credit. Today, the collective, each woman earns anything between 6,000 to 40,000 rupees. And also, you could read through the individual capital that has helped upgrade their machines, boost inventory for high demand orders and high demand periods, and also invest in specialized tool without losing any quality. So this is where we begin the concept of, do you equate social with charity? Harshad, if we could have the third poll. Harshad, the poll is not live yet. Could you? Thank you. Please note yes if you equate social with charity. No if you do not equate social with charity. Wonderful. I'm seeing a lot of active hands now. Thank you for that. Uh, we have three quarters of you saying you do not equate social with charity, and that's very empowering to see. Social comes from the Latin word socii, which means ally or companionship. And charity comes from the Latin word charitos, which means to love or to help. With the polls done now, let's move into let's dive into what the current landscape of India is. We are notably through various agencies across the world and India, our top is 1% own more than 40% of our wealth, and the bottom 50% own just 3%. There has been an inequality report, and various Gini coefficients uh, have given their immediate uh, readings on a consumption level, where 0.37 was what was indicated in 2000 and 0.41 increasing to about 0.41 in 2020. Very interestingly, the Gini coefficients are directly related to happiness indices across the world. If you see a very close correlation, when the Gini coefficients improved in the last 3 years, our happiness quotients also increased in the last 3 years. And that's where we come in and rank their positions itself. Our access to formal credit always remains highly unequal. 87% of Indians today do not have access to formal credit, despite having Jandan bank accounts. We have 55 crore Jandan bank accounts, and 87% of India still does not have access to formal credit. There is a huge credit gap. The traditional finance model has failed to close this credit gap. We always are looking at and at a very high rising market volatility amongst global uncertainties. The investors are moving now from a growth mindset, hyper growth mindset, to a sustainable value creation, as close to moving to the SDGs 2030. To realizing or not realizing them is a secondary question. However, the change in the paradigm shift in the mindset is the primary one. We always also look at the growing recognition that in social and environmental risks can materially affect long-term returns. Not all is well in the God's land. If there is a harm on the ESG factor of it as well. We also look at HNI segment where family offices and HNIs are increasingly incorporating value-based investing into their portfolios. Very happy to see that the the social investment angle, which used to be average on an average age of about say 57 years in 1960, has now come down to about 23 years of age in 2020. So more younger crowd, more Gen Z is looking at value-based investing even in the family offices and HNI segment. Moving towards what is the right balance. There we look at a traditional two-dimensional evaluation, which is risk and return. However, there is a third axis as well, which is impact. The question that we ask for, we ask ourselves always, till date, we have been asking is what will I earn? But the real question is what will my capital enable? What will it enable for me? What will it enable for my family and my society as well? 99% of what I do today is because of the society around me. 1% of is my action and my intent, of course. So businesses and investors are moving from a shareholder primacy to a stakeholder accountability, which means workers, communities, and the planets. There is a 5P model which the UN has released time and again. And there I always equate the fifth P not with profit, but with prosperity. Hence, peer-to-peer and social investments offer a blended value, which is moderate returns with measurable social outcomes. If you see the Venn diagram here, there are certain investors who are return seeking, there are certain investors who are risk aware, and there are certain investors who are impact focused. And the confluence of this is where the social investing and purpose driven capital lies. Now, to very easily explain what is peer to peer, it's a peer to peer lending is a very regulated model where individuals lend directly to other individuals or groups without traditional financial intermediaries. That means if there is a person who's seeking a loan and you have the capability to extend your help to him or her, uh, and you do that through a formal setting, through a regulated model, that's what peer-to-peer means. There are three pillars to it. The first is it democratizes credit. We are moving into a very democratized world in everything possible, even in the AI space. The next 10 years, or probably look at the vision of our honorable PM of 2047, Viksit Bharat, is to democratize each and every institution in India. And the first and formal institution to be democratized is credit. We enable ordinary individuals and HNIs to act as lenders and not just donors or spectators. It's always easy to say that somebody else will do it, but why not somebody else? That somebody else be you. And it shifts, the shifts capital from urban wealth centers to rural, undeserved or underserved communities. Replaces extractive lending practices with ethical, affordable credit access. Because everything is digitized, everything is in a regulated way, there is a set master directions that have been set out, and people follow SOPs to make sure that we are living in a very ethical and affordable credit access. To take credit is not to succumb to anybody else's will. To take credit is to get empowered, to feel empowered and to make empowerment. We have the second pillar is direct lending to underserved communities. So social investors fund farmers, women entrepreneurs, and micro enterprises in tier 3, tier 4, tier 5 rural India. So 65% of our Indians still reside in villages. And that is what Bharat means. This is coming together of India and Bharat through just a very small effort of extending your arm. Loans are used for income generating activities, agriculture, dairy, trade, production, working capital, etc. And it also creates a relationship of trust and transparency. I want to take you all back to the first P2P model, which was set up in Mesopotamia in 1900 BC, where there was no readily available formal system or a regulated system of lending. However, everything used to run on trust. And that's what we want to bring back to the system. And trust is always brought back to the system when there is transparency into the system. And transparency is brought by our regulator, which is RBI. Hence, fully digitizing the onboarding of our social investors, KYC, escrow-backed transactions, and regulated credit limits to ensure that there is risk mitigation and risk hedging as well, and also ensuring that whosoever you are lending your money to, you have a first-hand impact. We call it impact at one arm's length. That means you can dial up that person looking at your dashboard. You can just take his or her number from there, dial up them, ask how are things going on, what is the progress in with their business, and do they need any additional support as well. Hence, ensuring security, compliance, and investor protection as well. Social investments like the P2P lending let investors participate in livelihood creation, not just wealth accumulation. Now, what does P2P with social lens mean? So peer-to-peer started in the world as a regulated entity. You started in the world in 2004 with a few companies coming out of the UK and the US, starting with it. The first of its kind was Zopa. Now it has transitioned into a digital bank. And in India, it started in 2017. Now, traditional investing often prioritizes short-term profitability, market benchmarks, and uh, and financial ratios. And we know, as fellow peers on this webinar, that nothing good comes in short term. Social investing emphasizes on transparency, real-world outcomes, and long-term community resilience. We have created a new age asset class, which is purpose-driven and portfolio-friendly, with steady returns with low market correlation. Uh, Again, with the returns that we have been showing historically are upwards of 10%, and stay as high as 12.4% extended eternal rate of return. Uh, we have direct lending to grassroots entrepreneurs. So there's no via that goes. You can actually look at a borrower profile, understand them and their need and their interest and their intent to pay back, and commit a small amount. And it also ensures capital efficiency without intermediaries. Because there is no cost of borrowing in this entire lending model, it's very seamless. And the real impact is created at the grassroots level because we are able to democratize and make credit affordable for everybody. Rethinking risk, trust, resilience, and purpose. We look at social due diligence as core risk management, partner institutions at borrower profiling, uh, and prioritizing long-term resilience over short-term growth. And why I say long-term resilience is something that you will see in the slides to come is our Rang De story. So we started in, Ram and Smita, our founders, were living a very comfortable life in the UK, in Oxford in 2006. And that was the very year when the promoter of Grameen Bank also received the Nobel Peace Prize. And he had created a peer-to-peer lending platform back in the 1970s by just socially investing $8 into a women's self-help group, who then returned that $8 back within a span of 18 months. And that was the inspiration for them to come back to India, start Rangde as a non-profit. So we are a for-profit organization today. However, our heart and our DNA has always been non-profit. That means people over profit. Our journey leg one, we started lending where nobody else was lending in the country, and these were interest-free loans to the low-income households. We were able to uh, push around 80 plus crores, but closer to about 9.5 million US dollars, and impacted 66,000 low-income households. In 2017, RBI came up with a regulation saying it is mandatory for lenders to become a for-profit, either an NBFC or an NBFC peer-to-peer. And that's when the the team decided to transition itself from a non-profit to a for-profit to adhere and comply with the regulation. And it took us about 1.5 years to transition from the non-profit to a for-profit until we received our COR in 2019. And that's when the journey leg second began. Uh, Today, we have raised and disbursed closer to 95 crores, in fact, exceeding 95 and a half crores now, 11 and a half, $11.2 million, directly impacting 25,950 plus families. If you ask me today, do we have the data of 25,950? I can take this data back and date it back as 6 to 7 years ago. We track them almost on a monthly basis. How they are, even when the loan is repaid, we keep that touch point to them because there's always a possibility of a successive loan from them. And through the support of around 11,000 plus social investors, we were also supported by ICICI Foundation, Dr. Nachiket Moore, who was the first backer to Rangde, and also the late Sri Ratan Tata ji, who joined the board in 2015. And then that was during our non-profit times. During the for-profit time, they continued to be our long-standing advisors as well. So Rangde is a social peer-to-peer investing and a lending platform. Uh, Regulated by RBI. We provide affordable credit, usually in the bracket of 4 to 9% rate of interest, and that's a simple interest. The loan goes out to underbanked populations such as farmers, rural nano entrepreneurs, women, and youth collectives across India. We only provide livelihood linked loans. This platform does not provide personal loans. So there are three stakeholders. We have the borrowers, we have the social investors, and we have the impact partners. So quickly explaining them in the next slide. Uh, the social investors are investors like you and me who can start their investment journey from as low as 100 rupees. Imagine what would you get in $100 today? And imagine what would you get, what enablement will you be able to do with that $100 today if you invest on a platform like Rangde? The social investor transfers the money on a specific day. We have investment days twice a month. Very interestingly, we have an investment day tomorrow as well, which is 1st of August. So many of you who are very interested to look at the platform can log into on the website and start your social investment journey with as low as $100. Uh, the money goes to the lender's escrow, directly credited to the borrower's account. It gets repaid from the borrowers in terms of EMIs or EQIs as per the loan product, comes to the borrower's escrow and directly to the social investors. So Rangde does not own the capital or does not take the capital on its books. We have created a no-touch capital flow between the social investor and borrowers. I should not say this, but again, I'm sharing it with a disclaimer that even, God forbid, but even if tomorrow Rangde ceases to exist for any number of reasons, this model will still work because the lenders escrow are with our scheduled bank in India. Where do these borrowers come from? So that's where our impact partners, organizations who help us gain access to the market. And these could be for-profit organizations, this could be non-profits. We in fact work with 70% of our portfolio is non-profit organizations uh, who train a few, as we saw in the earlier case studies, who train specific beneficiaries and then attach them to Rangde's platform for their first check or their first borrowing. And in that sense, Rangde acts as the first formal banker to any Indian today. A quick snapshot of our track record. We have so far, again, Journey Leg 1 and Journey Leg 2. Collectively, we have disbursed around 20.7 million US dollars through the support of 26,500 social investors like you and me to about 91,950 unique borrowers since our inception in 2008. And our borrowers have collectively created 2,40,920 jobs These jobs are tracked and submitted to the local government office on a biannual basis. Out of which 1,69,854 jobs across 1,600 pin codes in India have been created for women. Again, our principal lost, and this is what shows the trust. Um, Out of the 95 crores, or I would say the $20.7 million that we have so far disbursed, we have only lost 0.33%. 72% of our women are of our borrowers are women as well. A fantastic case study and a success story as to where should India and where should Indians invest. Uh, we see a lot of venture capitalists coming in investing in companies who are creating technology, but there are very few people who are investing in technology adopters. The real reason and the real work that has to be done has to empower the real Indians to adopt technologies which are of the future. Here, because we work a lot in the Northeast as well, we work out of 26 states, Northeast being one of them, the entire Seven Sisters. Honten and Paipha farmers from Nagaland always dreamt of beyond subsistence because they do, step and subsistence level farming. They saw an opportunity in banana fiber, a very high demand handicraft material, but couldn't afford the machines that were needed. So each machine used to cost about 2.5 lakh rupees. Through Rangde and our impact partner MRDF, they accessed the first check of 1.5 lakhs at 8% rate of interest with absolutely no collateral. They installed electric fiber machines, powered them through renewable mini grids, and this their quality caught the export brand TBCO. Few of you would know this. Each unit produced 35 kgs of fiber and 32 kgs of bark every month. Today, this group is doing annual revenues of well over 30 lakh rupees. And this success sparked a movement, and that's where the network effect came in. The butterfly effect soon rose not just from the Mon district to other districts and other tehsils as well. 25 women self-help groups in the nearby villages were trained by the TBCOs, master trainers. And today, Netfee and SBI have joined in the forces to become the second bankers to taking this to more than 20 villages, creating a breakthrough in how rural enterprises attract formal credit, formal capital, and thrive. And this is how a very small amount of, so this 1.5 lakh was given to them, but close to about 130 people. So just sending out your $100 could create a ripple effect, and that's rightly advocated from this case study. Many of them, again, just a very quick snapshot. Uh, uh, Indra Devi in Rajasthan supports 3 families today. Took a 50K out loan from us through our social investors for setting up a retail outlet, uh, and supports her husband today in managing the household. Shrinu wanted to convert his auto to an electric vehicle, and this is what I was meaning to when I shared about technology adopters. 55K loan today has inspired 15 plus auto drivers in Telangana. A very similar story has actually happened in Mathiran district in Maharashtra as well, where 53 auto rickshaw, 53 hand cart pullers switched to electric vehicles through the support of Rangde's social investors. We have already seen Honten and Paipha's case. Shiva Kumar, if you type Shiva Kumar life-size elephant sculptures, you could see the first photograph of him standing in the New York Times Square. And this happened a few months back, where the loan that he took from Rangde's social investors, 5 lakh of it, today supports, put him to the New York Times Square as one of the showcases, and supports 2 families. So we do a very high transparency impact, and our impact is number of direct life supported. We don't work in an indirect manner. Of course, speculations could be made of, a 6x impact, where we could multiply this by 5.5, which is the average household size in India, and we could say a 30x impact has been created here. However, because Rangde stands for transparency and trust, uh, and we the loan that has been given out to somebody, the loan that has actually helped anybody, uh, directly, as we say, uh, investing as well as impact at one arm's length is equivalent to the impact that we register on throughout the 95,000 borrowers that we have so far. Few of our advisors and equity investors, Dr. Nachiket Moore has been long-standing advisor to the company. Mrs. Chetna Gala Sinha, again, wonderful track record, wonderful career in empowering the women. She started the Mandeshi Bank, which is a small finance bank specifically for women. We have Vikas Arora, who's the director at AVPN, a Singaporean national. We have Shashwat Belapurkar, chief representative ING, Nihas Bashir. He runs a solicitor, he's a solicitor in India, runs a firm here. Arun Jain, founder of Polaris and Intellect. Ramesh, who's the CEO of India Tech, also was the CEO of APCO earlier. And we have 260 angel investors on our equity cap table, people who have believed in the platform for over 17 years today. Uh, it's a distinguished leadership team with extensive experience in impact, finance, investments, partnerships, technology, entrepreneurships, and business development. Together, our average, we are about a 55 people strong team with thousands of partners, partner hands on the ground. And these are the leaderships. Of course, we don't believe in the leadership versus a team member. And henceforth, every person who's creating impact is a leader in himself or herself. Is India ready for such an opportunity? That's the question that was lurking in my mind when Pankaj asked me about the webinar. And there was a resounding yes, because I was working on this slide a few weeks ago, and it said that we as Indians are always looking, not just people residing in India, but also the diaspora, the PIOs, the NRIs, and OCIs are always looking to give back. We have an innate quality and innate nature of giving back, and that is something that we would want to leverage and provide that opportunity for not just us people residing in the subcontinent, but also people staying in US, Canada, UK, Middle East, Singapore. And you can actually see the numbers uh, crossing way above 20 million. Um, and these are people who have active banking channels. Of course, most of you would have clients, or would you work with people overseas who always send back money to India. But the money that they send back is a philanthropic money. It's not a social investment money. And that's what that's where the opportunity lies, that 10% of the entire portfolio that they invest in India in, say, other asset classes, if 10% of that money can come into a personal finance, which is a social investment, where social investment falls, we can actually do lot great. And I'll start the countdown now. And I would request for everybody to look through these slides. Uh, Change doesn't start at top. It always starts with us. It's a bottom-up rumbling approach that we are taking. This is a movement. Over 11,000 of us are already investing one dream at a time. These are real photographs that you see from the grassroots. Backed by founders who left Oxford for this, Ram and Smita gave up their cushy lives to build a new kind of India. And you are a part of it, or you could be a part of it. You're not funding profits, you're fueling potential. Your help You help break generational poverty, and that's something that gives you peace at night, that gives you a very warm sleep at night, that you were able to help somebody in who has broken down the generational poverty cycle and has now come out. Your loan could mean a child goes to school and a woman gets her first paycheck. You're not investing in systems, you're investing in Sujata, who now runs her own tailoring business. Sujata is one of our borrowers right outside of Udaipur. Um, she runs this center. Right next to her shop is her husband, who does not run a center but works at a retail store. So that kind of I would say that kind of parity, in not a disparity, but that kind of parity is something that a very small 50,000 rupee loan was able to empower her to, and she got this loan through a self-help group that she was a part of. You'll get updates, stories, repayments, real lives, and not just reports. That means you can look up to your dashboard, take the phone number and call the person and get the status update from them. Of course, because it's digitized, we also provide you with reports, but there's a cross tally that you can do at any single point of time. This is what real transparency means. We always talk about blockchain and other things, but if done right, we don't need all those technologies. We just need a human touch point. You see where every rupee goes. Not a single rupee is untracked. Every single rupee out of the $20.7 million, the 185 crores that we have disbursed so far, isn't blind giving. You get to know the person, their dream, and their journey. In fact, you choose them. Through the platform, when you come, you can actually choose the borrowers in whom you want to invest. And that's an empowerment that no other platform can be, will be able to give you. In fact, we want more Rangdes out there. Even a 1,000 rupee can help someone start a business, buy seeds for the next harvest. You don't need lakhs to change lives, just need an intention. It's not charity, it's a loan that comes back. When it's not a charity, that means, I'll give you a quick example. If in the CSR space, not discounting the efforts and the impact that CSR has done so far, and it continues to be the backbone, the fourth backbone of this country. Um, if you provide 100,000 rupee donation to somebody, you're making them dependent, because that donation may or may not come back and may not result in the right rightful spirit or the rightful outcome. However, if you provide a loan of that 100,000, you're definitely sure that 100,000 is going to come back because it's a livelihood linked loan. And that 100,000 is a capital reserve which can recursively be used every single year. Of course, it's generating an interest component as well. And that's independence. That's what we are aiming for. So my question to you at the end of this is, if you want to invest in a business, how about one run by a farmer or an artisan? Of course, you do your venture capital investments or your angel investments in startups and in companies and in stock markets and in other asset classes. But how about you put that 10% or you earmark that 10% every month to invest in a top up game, something very similar to how you invest in mutual funds, like an SIP into Rangde, and through Rangde into fellow Indians. Uh, Lastly, understand that I'm almost running into my last couple of minutes for this presentation before the Q&A begins. Who can join? You can become a social investor. I would request Harshad to also share the link, the bit.ly link, for anybody to explore the platform. You could scan the Instagram and LinkedIn and get connected with Rangde or myself directly. Um, but who can really join on Rangde? So resident Indians, NRIs, OCIs, anybody who has an Indian descent or is of Indian descent can easily join. We are already working with a few wealth managers and qualified personal finance professionals for distribution of this fund. In fact, we would invite more of you who work in very similar domains to start a pilot with us. We also look at family offices, HNIs and ultra HNIs, who are mainly looking at targeting at Rangdale for legacy creation. Say, for example, somebody creates a fund uh, with their family name, right? And they pass that social investment fund on Rangde to their children or their grandchildren. And that's how legacy is be created and legacy is forwarded. Also, once you become a social investor, you could also become a social advisor to these nano enterprises and help them mentor through the entire ecosystem that has been created. So when we give out the loans, the reason for our write-off, so such a less write-off number is primarily because we create an ecosystem, and that ecosystem is created by our impact partners who then move along to help nurture these businesses, these nano enterprises, and help get them from 0 to 1 and then finally going from 1 to 10. You could also get in touch with me at siddharth@rangde.in, or just drop a hi at my phone number. I would request Harshad to also share the email ID and phone number in the chat. And that's it from my side. Thank you. I know this was a very short FaceTime that we got. However, looking forward to a lot of your questions and further FaceTiming with a lot of you as well. Back to you, Pankaj and Harshad.
Thank you so much, Siddharth, for sharing your experience with us today. It was not just about Rangde or what you're doing, but in general about the concept. And I think a lot of questions are related to that. I'll not really waste much of time in asking, because I myself have a lot of questions, but I think there are so many of them in the chat that I'll straight away move to that. But in case anybody has questions from audience, please keep sending. It's a very good question which Surbhi Priya is asking, and her question is. I know the purpose is not to get too much profit, but how do you decide interest rates for different borrowers, businesses, purposes? Obviously, they might not have civil scores, which are generally used by banks. So, what's the methodology used, and how do you decide that?
Wonderful question. Thank you. Thank you for that. And the reason I did not put that in my presentation was waiting for somebody to ask this. So we have a very great underwriting program, and we have data from the past 17 years. The real intent to pay back is looked at from four angles. One is, of course, how does the borrower why does the borrower need the money? That's the first. Because the borrower is being referred to us through a formal system of impact partners. There is a due diligence, a local level due diligence, which is a peer-to-peer due diligence that we do. Say, for example, if you have to give out money to a friend of a friend, you will definitely ask a friend whether this person has a history of giving back, and that's how life was before CIBIL score came in. Uh, so thanks to all the Jews and the Greeks who and the Italians who institutionalized banking, but we work in a very rudimentary way of getting due diligence. However, because we are regulated by RBI, there are specific reports that are being created by our underwriting platform, and then the intent to pay is directly garnered by the level of expertise the person has with respect to the formal banking system. So there is a financial literacy program that is also given to them, because many of the people who cheat the program either know too much about the program or they know nothing about the program. So when we do that financial literacy modeling with them, we all automatically understand. In fact, to answer your question, in quantifiably, we reject almost 75% of the borrower profiles that come, and also give them a very crisp feedback as to how they can apply again after, of course, a buffer time. The interest is generally given to us by our underwriting platform, which stands between 4 to 9%. But if you today go onto the platform, many of the loans will stay within the 7 to 9% per simple interest per annum. uh, and lastly, if there is a dire situation and we understand that, for example, I can give you the example of Maul Keki Foundation. You would have seen a lot of people in Manipur being displaced by the by the riots that actually happened there between the two tribes. Rangde was the first one to actually go there and give interest at 4% to people who were IDPs, internally displaced people. And we gave loans to about 210 of them, and they're actually rebuilding their livelihoods today. So the rate of interest is generally, dependent and based on all of these factors.
That's great, very helpful. And it's a related question which I'll probably ask. This is coming from Sagar Thakkar. His question is, how can a social investor who is new to your platform evaluate the risk parameters prior to landing? Are there parameters that you suggest to new social investors? It was related, that's why I combined both. So over to you, Siddharth.
Sure. Thank you, Mr. Thakkar. Great question. And I would say, you know, you start with as low as $100. The, when you actually have that risk appetite that you can, for example, if you lose $100, it's not going to cost you a lot of, lot of ill or a lot of hurt. Uh, there is no way possible for you to understand the risk before starting to experience it. You have to get your hands dirty. You have to get hand in glove with the platform, and you have to start investing with a smaller amount and slowly step up your investments. It's very similar to how you invest in any organization, in other asset classes as well. You start with a small amount and then you move to a higher bracket. And of course, this is not a new concept. Our financials, because we are a unlisted public company, our financials as well as our track record speaks for ourselves. And there is an intent for us, for our team, to rightfully deliver, very well due diligence profile to you, so that the investor principal protection is foremost taken care of. And also, because this is regulated by RBI, necessary checks are put in place so that the risk is hedged. And once you start your investing, of course, we can deep dive into how your portfolio should be managed as well. So RBI has kept a limit of, yes, say, not investing more than 50,000 rupees per borrower, and not investing more than 50 lakh rupees per investor. So if you diversify, say, 10,000 every month across four different people, and that's how very simple portfolio management works. The entire portfolio is going to, give you good returns as well as ensure capital protection.
Thank you, Siddharth. I remember, like you mentioned, that you want many more Rangdes to flourish, hundreds of them, thousands of them. Your wish is granted. There is a question from Vaishnavi Patel. If someone is planning to start a P2P model, could you please explain the possible revenue streams or monetization strategies that can make the model financially sustainable? Because that's also something which you strongly advocate. Over to you, Siddharth.
Absolutely. Uh, I would suggest first to start your investing cycle with us, because once you experience the platform, you will be able to understand how to create this entire company around. For us, there are three revenue channels, and primarily you could also look at more revenue channels. Again, we RBI in the last financial year stopped revenues or stopped income from spread. So there is no longer incomes from interest spread that you can earn. The incomes that you earn are primarily your compliance fees or your performance fees, which can range from anything between 2 to 7%. Again, this is not mandated by RBI, but this is something, a good practice that people do. Other P2P players, of course, after the T+1 that came through, are not in compliance with the regulation, hence they are not working across. You could charge the same amount from investors, the compliance fee, and you can charge the same amount from borrowers. And for us, there is also, impact partners are organizations, because it's a cost cross-through platform. Pay to be on the platform, pay to use that access to investors and access to borrowers. So there are three streams: from social investors, from borrowers, from your partner organizations, from your ecosystem partners. And if you do start the peer-to-peer platform, please make sure the only way that you will be able to succeed is if you add a social element to it, because there are 160 peer-to-peer platforms across the world, and they have all failed because none of them had a social angle. The only three that are actually actively running today, one in the US, one in Indonesia, one in India, run because they have a social angle attached to it. So just make sure of that when you're starting up. Yeah.
Great. Thanks, Siddharth. And again, more on this. Kushagra Bantia, the question is, what is the eligibility requirements to get the license to start an NBFC P2P? And is it any different than getting a license for a bank? Of course, that would be more stringent to get a license for, but anything you want to comment on this question, or is Siddharth?
Absolutely. In fact, you could look up the RBI's website. There's a huge list of the documents that you require. There's, of course, a first draft that you sent out to them as an intent document, which talks about why you want to start, what are your target groups, something like a pitch deck to RBI. Also, to simplify for you, um, once you get an approval in place. Uh, then you start off, create your bank account, set up a 2 crore corpus, which is a minimum requirement for setting up a NBFC peer-to-peer. And that 2 crore has to be maintained in the bank or at at the end of every quarter. Finally, you get your certificate of registration, which is a COR, and you're all set to go ahead. Uh, mm, with the inspections and the checks that RBI does almost on a biannual basis, make sure that you're complying with every of them, because a penalty in such a tight tightly regulated market could really hamper your growth and hamper your progress. Rangde has been fortunate enough that we have always stood on the right side of compliance and have never been penalized. And even though peer-to-peer was in the news for all the wrong reasons, but the regulator came to us, again, I'm saying it on camera because this was on record, came to us and said this entire T+1 was um, for the entire industry, but Rangde is a collateral damage. We know you guys are doing great work. Many of the investors on Rangde are also, professionals and working professionals at RBI. So that gives us and instills a lot of confidence because, once well as they do, but just make sure that you go through the list of all the requirements that they have.
Great. We have 2 minutes left, and probably I'll try to fit in one more question. Soumya Prakash, the question from, I think it's her, Soumya Prakash. The question from her is that are these loans covered under credit guarantee funds provided by the government?
No, they're not. None of the requirements or none of the loans that go out are under that scheme. In fact, none of the credit that you go, that gets out, even through a bank, is covered under that scheme until an ARC comes in, which is until the liquidation happens. And again, a model like such has been created by the regulator to empower not just people living in the tier 1, tier 2 cities, but the intent of this model is to actually lend out the hand to people in rural India. When and in fact, none of the investments are secured, even if you look at other asset classes. But here, risk hedging and risk adjustments are top priority for the organization, and they've always been an industry-wide low.
Great. Not just questions, but there is also some very interesting feedback. Rudra says that I've never heard about P2P before, learned something new, and basically P2P lending is OTC way of providing credit. She had a question also, but I think my sense is that since we are short of time, I would recommend everyone who has questions probably get in touch with Siddharth. I think he's the right person to talk to you about things. There are a lot of people, anonymous attendees as well, who have questions like how does your due diligence works? Would Rangde be open to collaboration with foreign nationals and foreign organizations? All those questions you can please direct to Siddharth. But personally, for me, and I would say with confidence on behalf of my audience as well, that for all of us, it was extremely, extremely insightful to listen to you here, Siddharth. Thank you so much for sharing your experience and insight.